how do you allocate in a way that you're earning a return no matter what? You've got cash flow to live life no matter what. You can cover your expenses no matter what. But if the economy goes up, you make good money. If the economy goes down, you make good money.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, and welcome to today's show on Wealth Strategy Secrets. Our next guest is Justin Donald. And today we're going to discuss passive income theory, asset allocation, and truly unpack how the wealthy invest. Justin is a true testament to passive investing, as he created enough passive income from investments in a mobile home park to retire from his W-2 job. He then achieved an 8-figure net worth before turning 37 through lifestyle investing and strategic relationships. An entrepreneur at heart, he started his entrepreneurial journey in high school with newspaper subscriptions and later excelled at Cutco for the next 20 years. Today, he runs Lifestyle Investor, offering a best-selling book, yearly masterminds, and a popular podcast to help others achieve financial freedom. Hope you enjoy the show. Justin, welcome to the show.
Hey, thanks. Great to be here.
Yeah, awesome to have you on the show, Justin. Really looking forward to the conversation today. And I know the investors are going to get some new insights from you if they haven't had the opportunity to read your book and really kind of go deep today, right, in some of your passive strategies, what you've been up to at the Lifestyle Investor. But for those who haven't heard you, tell us about the journey, right? I think there's so much to kind of glean from the journey, and you really have truly taken that journey, 100%. Right, where you've gotten to that financial independence level at an early age.
Yeah, Dave, it was really fun talking off air. Part of me is like, we should have just hit record right when we hopped on here because we talked about some cool stuff. And, I'm excited to have you on my show, the Lifestyle Investor podcast, next after this. But yeah, I'm thrilled to speak with you and other people that are like-minded and, are going through the struggle or are trying to figure out what are next steps. And so I think the most important thing is, for most people, it's not a quick transition. It takes time. And most of my greatest learning lessons came from the mistakes I made along the way. So if you just look at the results, you might say, wow, that's really cool. It sounds so easy and it happens so fast. But the truth of the matter is that's not the case. I had many stumbling blocks along the way and a lot of self-doubt. I had friends that were telling me, the things I wanted to invest in were crazy. I had, my mentors saying, that I shouldn't pursue some of the things that I ultimately ended up pursuing that really created a lot of wealth for our family. But I think oftentimes as leaders, we have to take the road less traveled. We've got to go against, the norm or against the herd and kind of pave our own way. So for me, I got started in sales at a young age, paid for my college. My parents didn't have the funds to be able to send me to college. And at the time, I was real bummed about it. But today, it was one of the greatest gifts ever because I had to learn to be resourceful and figure out how to make money very young. I had to learn work ethic, which I gleaned from my dad. I had to, figure out how to work with people, which I learned from my mom. And so I was able to graduate from the University of Illinois, debt-free, and then basically opened up my own business under the umbrella of another company. And so I did that for a period of time, sharpening my skills, working with people, learning, management structures and building systems. And eventually I said, man, this is a lot of work, especially early on. There's no blueprint for what to do. So I have to figure out the systems and how to hire the right people all on my own. And this is taking a ton of time. And I don't know if I'm committed to this amount of time when I'm married, when I have a family, when I have kids. And so I just remember thinking early on, I really need to to start buying assets that produce income, so I'm not always trading time for money. And that's really what, I guess, catapulted me into investing in our first real estate endeavor, getting into mobile home parks. I can tell you that whole story if you want, but we'll come up for air. But that's kind of how it all got started.
Yeah, no, makes sense. So, I mean, was there a particular moment, or did you learn from a mentor or read a book or something that inspired you to really kind of, change, and make that shift into the passive side?
Yeah, probably all of the above. I mean, at that point in life, I was really living life on default, not life by design. It was just going from one thing to the next, putting out fires, problem solving, really not spending time for myself or even proactive, like, what do I want life to look like? And so, I had a coach, I had a mentor. I'd been reading Robert Kiyosaki at that time. So I had just finished Rich Dad, Poor Dad and Cash Flow Quadrant. I read those back to back, and my eyes were just kind of open because I remember sitting in my office on a Friday night. My friends were reaching out, wanted to go out. Can I meet up with them? And I remember sitting here, and this was early on in my business where it was just me, and I didn't have a team. I didn't have any. I think I had one receptionist, and she was long gone for the day. And it was just me at like 10 p.m. on a Friday night. And I remember thinking, I'm okay doing this right now. This season of life, this grind, this is good for me. But I'm not okay if I'm in my 30s or 40s and I'm doing this and it's at the sacrifice of spending time with my family and doing Friday night, family night, or whatever it is. And so I just remember sitting on the floor in my back office, preparing for a hard day of work the next morning, Saturday morning, which I was in at probably 5:30 a.m. was kind of my normal time, and just, to prep. And so I remember thinking, okay, I'm going to do this different. And I remember reading something that Robert Kiyosaki said that basically, I told all these people, people are like, what do you do? I'm like, oh, I'm a business owner. But the reality is I wasn't a business owner. I was owned by my business. I was actually a slave to my business. My business owned me. My possessions owned me because I had, payments that I had to make in order to keep them. And so the reality is I wasn't really a business owner. I was more of a sole proprietor. I remember reading where it said like, hey, you're not really a business owner until your business can run without you. You've got systems and people in place for a year or longer with the same output or greater than if you were there. And I was like, wow, okay, I miscategorized myself. And then I started thinking, well, do I even want this? So one, while I'm in this business, I better get better at working with people. I better get better at building out systems. But do I even want that? Do I actually want to be on the investor quadrant side of things where I invest in businesses, I invest in assets? And the light bulb just went off. And I said, that's it. That's what I need to do. So I'm going to stay here and I'm going to figure it out while I'm here. But my transition over time is I'm going to move to this investor quadrant and I'm going to move out of basically trading time for money.
Yeah, no, that definitely resonates. I really credit Kiyosaki. He's just changed, so many people's lives. And for me, it was the same thing. I really didn't know anything about investing, except that a fact that I wanted to, save for the future. And I had read The Purple Pill as well when it just came out, like in 99, and then Cash Flow Quadrant. And Cash Flow Quadrant to me was so illuminating,
yes,
right? Because this is how the game is played.
That's right.
But the biggest shortfall that I saw in that was it didn't tell, there's no blueprint, there's no strategy, there's no what's next. It's like, well, okay, I like that. I want to be a business owner. I want to be a professional investor, but what does that even mean? How do I really get there? Real estate seems like a great asset class. And I started chasing some single family rentals. And, to your point, trading my time for money, just doing something else, chasing a real estate deals. So it's really fascinating, right? Because we're 25 years past when that book really launched. And you've seen how many different people have taken this whole passive income theory and really taken it in different directions. And that's what's, I think, really unique about your story as well, is how you've really taken this and how you're trying to help people right now right, using passive income, kind of strategy, right? We all understand that we want our passive to exceed our expenses so that we can, live a great life. But what does that really mean, right? So why don't you break down, maybe this is a good segue into your model, Justin, right? Because I know it is quite unique.
Yeah, sure. And you bring up a good point, because I remember looking at, Cash Flow Quadrant, and I was like, all right, this book, I would still say today it's the single most impactful book that I had ever read. At that point in time, I would still say today it was the most pivotal book. But I remember thinking, there's nothing, like, now I know what I need to do, but I don't know how to do it. And so that was kind of my whole purpose in writing The Lifestyle Investor, was to lay out the framework for how you actually transition, from a W-2 to an investor, or from a business owner to an investor. I mean, that to me was really important. But I did it in one specific asset class. I remember I had friends that thought I was crazy because I started investing in mobile home parks, and they're all like, this is a crazy idea. I had mentors that are like, this doesn't make sense. This sounds like you're just throwing money away. And I remember waking up in the middle of the night, some nights, in a cold sweat, like, am I throwing money out the window? Like, is this a bad decision? But whenever I would let logic set in, I would say, well, other people have done it. And if I follow their blueprint on how to do it, I should at least be, 60 to 70% as good as they are. And over time, I can get better. And that just seems better to me than, trading time for money for the rest of life. And so I took the leap, and we bought our first mobile home park, and again, I mean, my friends thought I was absolutely nuts, but this one park retired my wife. It was funny because what that produced in cash flow was within $1,000 of what my wife was earning as a teacher at that point in time. And so my wife retired as a teacher, and that's when we had our daughter. So, it was great. We bought her time back. I bought a second mobile home park, and that one replaced our survival income. And so at that point, we didn't have to work. Now, it wasn't lifestyle, but it was all the main bills. But it does take a huge weight off to know you don't have to work. It's transitioning from having to work to getting to work. And so you get to be smarter about what you spend your time on, and you're not as afraid to delegate out certain responsibilities or things you don't like to do. And so I got smarter about where I spent my time. And then we bought a third mobile home park, and that one replaced our lifestyle income. And then we did a 1031 exchange on that, flipped into two others, and that replaced our earned income. So the goal here, like, I could have walked away a lot sooner from the business I was running, but my wife really appreciates safety and security. So instead of taking a big risk, it was, hey, we can methodically do this. We can do this over a period of time. We can replace the income. So that way it's not like a major life change. And for us, life just continued on the same. Nothing changed because the income was there. And that was the safe way, the way that got my wife on board. I mean, she at first thought I was crazy, but, as we slowly did this, she's like, okay, I can see this working, because, her parents grew up, basically telling her, find a safe job, work for the government, get a pension. That's what her parents did. And so I get that. And so but I also, for me, said, instead of like, hey, let's live life from this budget, I've always looked at it as, well, if I want to live a certain life, why don't I just figure out how to get the money to equal that life? I'm not going to live the life before I have the money, but if I know that it costs a certain amount to have an ideal life, and I can break it down on a monthly basis, then I can achieve what that number is over time.
Yeah, makes perfect sense. And I'd love to really unpack this topic here with you, because I do think it's pretty fascinating, right? We all really talk about passive income, right? I mean, everyone in this space and what it's going to kind of do for you. But you brought up a great point really around security, right? So if you think back to Maslow's hierarchy of needs, right? I find that based on people's own investor DNA, their background, maybe their belief system, where they were raised, all those different things, lifestyle, investing, security, all means different things, right, to different people, right? So is passive income, right, if you do reach that place of having your passive income exceed your expenses, have you really just achieved a level of financial security that provides you a certain security in life, or are you taking it up the next level to, like you say, maybe having a little bit more abundance in your life? Because I would actually be contrarian here for a moment and say that some people can actually get trapped in their goals. So I could achieve that goal, and I have achieved that goal when my expenses were low, right? And you say, hey, this is great. And what I would call that is actually abundant complacency, right? And so how am I going to move to the next level? Now, you may not move to the level of, let's say, Johnny Depp, who's spending 7 figures a month on his lifestyle, right? But what is really important to you, and also thinking past the money, right? Because at some point, right, you've hit the financial security, you're doing what you want in life. How are you going to get to, I would say, higher on the Maslow's hierarchy towards fulfillment?
Yeah, it's interesting because there are a lot of different, categories that I think people fit into, and there's a lot of different, if I just laid everything out, I'd say it's interesting because, too much of a good thing is not a good thing, right? So it's almost like I've seen so many people, they're like, oh, passive income, this is great. I'm going to buy my first property. Now I've got passive income. Well, I'm just going to keep doing this and I'm going to buy a whole bunch of them. And then all of a sudden it's like, wait a minute, I just bought myself another job. Now I have all these people to manage, all this stuff to do. Like, what just happened? So I do think we got to be careful there. We got to be careful of lifestyle creep. Right? You make more and then you want to buy more things and do more things. And so that's a real thing that can make people get trapped again. And then I think there's the complacency thing where, some people, they're able to, maybe life is just not expensive yet. You're able to do this early on and then you become complacent with the way that life is. I think the way I look at it is there's a few different tiers to hit. The first one is survival income. Once you hit that, it opens up a lot of opportunities. And I feel like it lifts the mental weight that is there, even for creativity, even for spontaneity. And it allows people to get out of the mindset of making decisions with finances at the top of the fulcrum. Like, I make a decision because I can afford it or can't afford it. It's good for the business financially or it's not, because that's not always the most important question, right? What's important to the business may, if something's really good for the business, it may not make sense financially, or it might make sense financially. And if you're in a good place financially, then you can make different decisions and you can, trial and error a little bit more. So you've got survival, you've got lifestyle, you've got ideal lifestyle. And I think you can even hit another pillar where you're covering all your business expenses for those of you that are entrepreneurs, where you have passive income that truly covers the business, which allows, it unlocks this ability to bring the right people in, to spend more money, to try different things, to delegate more responsibilities, to just take some calculated risks a little differently. And so those are kind of the tiers that I look at. But my belief is most people are going to find it really challenging to discover their purpose, their passion, what fulfills them when finances are still in play, when they have to make money. There's some element of hustle to get by. I have found in our community, and just for myself, that when you can solve the financial equation and you don't have to work, that's generally where this time and space comes in. And yes, you can create it otherwise. It's just harder to do. And it might feel a little more manufactured than when you've really achieved financial freedom, or at least financial survival. And then you can start making decisions based on that and figure out what it is that, you're passionate about. What do you like doing? If you could design your ideal day, what does it look like? Who are the people you want to spend the most time with? Like, who's your personal cabinet? And so I think if we can get intentional and find the time to solve for those things, we're going to be able to live in this place of fulfillment and passion, much more so than if we're just living life by default.
Yeah. Yeah, no, I would agree with that. And I think probably the most important characteristic is actually self-awareness and really, understanding yourself, again, your background, your belief system, what's really important to you, and then trying to create that target of where you want to go, right? To carving out that intentional life. And because everyone's lifestyle design, right, is going to kind of look a little bit differently. So yeah, it's a very interesting topic because I think sometimes people don't truly take it to the next level and really understand what that means. They feel as if all of the pressure has going to be released. I mean, I know many entrepreneurs who've sold businesses for 8-figure returns and they're still miserable. Or people have 9 figures and they're miserable, right? So why is that, right? So money wasn't necessarily the thing that got them to where they needed to be. So I think you can make steps at that regardless of where your passive income is today, where your net worth is today. But definitely agree with you that it removes some of that, natural pressure that's there, gives you a little bit of space to think more, be more creative.
And Dave, I'd love to double down on that because we've had a lot of people in our mastermind and the lifestyle investor community that have had 8 and 9-figure exits. And one of the things that we see constantly is these are individuals that now have more money than they ever thought they would have. It's the most money they've ever had in their life, yet they're most afraid because they don't have the lifestyle income or the expenses, the business to like cover what life looked like. So now all of a sudden you've got this lump sum of money. Let's just call it, I don't know, $20 million, right? But every single month or every single week, you see it creeping down because you're living life from it. And you make a few bad investments and that money's gone. And by the way, you pay taxes early on. And so there's a big drop off. I know some people that have gotten divorced. And so, there's a big drop off. We have people in our community that had 9 figures and you would say, you are totally set, except 9 figures, 100,000, you get divorced. Taxes 50,000, you get divorced 50 million, you get divorced 25 million, you make a few bad investments. Now you're down to 15 million and you have a $1 to $2 million cost of living per year and you dwindle all that money away. And some of these people don't want to change that lifestyle, or it takes a lot of convincing to help them slow it down to get the passive income in play to then live that lifestyle. And so it is so interesting to me because I see this all the time, people with all this money, but they're literally living in the scarcest way that they ever have, feeling thriftier than they ever have when they've got the most money sitting in their account than they ever have.
Yeah. What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Yeah, it is really all the underlying psychology to it. And then there's some other, interesting things we can glean from as well. Like, take a look at the statistics from lottery winners, right? Yep. People playing the lottery shouldn't be playing the lottery, right? That's right. Then when they do, I think it's over 90% of them are actually worse off than after they had won it because, to your point, the lifestyle creep starts happening and they really didn't learn, they didn't really understand, their purpose, their fulfillment, what's really driving them. So it doesn't really help them. It actually hurts them. And then we can take that a step further too. If you look at the statistics, from, legacy wealth, right? And almost 80% of G2 wealth is actually lost in generation 2. Yep. And it goes up to 90% in G3.
That's right.
Right. So where is the mismatch there? What are people, missing? What are they losing? What are they not passing on to those other generations, right? About belief systems, about values, about goals.
Yeah, and I think that's it. You hit the nail on the head. It is about values. It is about meaningful work, like some form of contribution. And by the way, that contribution doesn't have to be like purely philanthropic. It can be, but I just think people need some sort of purpose and meaning in what they do. So you can be compensated in a way that still has you doing something that has purpose and meaning or impact, right? So I do think that those are important components. And I would also say a community, having like-minded people around you. And I think it's important to have both people that pull you up, people that mentor you, and then people that you can pour into and pull them up. I actually think having both is really important. You need someone to pour into, and you need someone to pour into you.
Yeah, agree. Yeah, we've seen so much progress in our mastermind community as well, of just having that accountability, being able to problem solve in a room of like-minded people that are all going in the same direction. Wow, can you compress time? Right. I think it's really huge. And people often, overlook that aspect, right, of community, of relationship capital, that's so important in this game.
Well, that's it. That's the key. It's exponential, right? You go from a coaching relationship that's very linear, and that person pours into you. And I'm not saying they're not great. I love coaching relationships, and I think there's a time and a place for them. But you get into a community of like-minded people, you find the right mastermind where it's your type of people that you can connect with, you can resonate with. Well, now you've got all these different degrees of connection and different degrees or lines of impact. So now you're not going linear, you're going exponential, and you have so many different ways to do it. And, I try to remind people this all the time. For me, I'm in a ton of masterminds. I have 2 of my own, and then I'm in 14. So 16 total. And I don't attend everything because my mindset is I don't have to consume every single thing to get the value. All I have to do is find the thing that is worth whatever the price point is. And it generally comes from relationships, a connection, or some piece of education, some mindset shift, some idea, some partnership. But generally, it's like one thing or 2 things that I can derive the value from. And I think that also kind of like lowers the bar, so you don't go into every event feeling like you have to get so much out of this event to, capitalize or get an ROI.
That's such a great point, Justin. And I think, many of us, and frankly, I think we're kind of taught this, and both you and I come from the corporate world also. So we've been in the grind and the hustle there, and you're always looking for that ROI. There's always got to be immediate numbers and results and stuff. So we're kind of trained that. But it's really fascinating, right? If you can show up actually to a mastermind instead of always looking out for what's in it for me, the more that you can actually start serving other people and then creating value for other people. I mean, that is some real exponential impact, and it is interesting, is just how you approach that, right, in those types of communities versus just, looking at it from my perspective.
Yeah. And also we've found that the people that want to contribute in that way are the better fit. I mean, for us, part of our onboarding criteria and interview process is to figure out, what are the unique giftings that people have that they're willing to share, and how eager are they to share what they know? Because if someone is not willing to, or in some cases we have people that are very humble and maybe don't feel like they have anything to share because they minimize their expertise looking at a group that, maybe is bigger fish. But I think everyone has something of value. Are you willing to do it? And how well of a subject matter expert, or how strong of a subject matter expert are you? But we've found that the people that want to share and want to contribute, that's who we want to build our community with. We've also found the people that don't, they're just not the right fit for us.
Yeah. Justin, do you have a particular investment thesis, or there's an investment asset class that you focus on?
Well, I invest in just about everything these days. I mean, I'm a huge fan of alternative investments. They've outperformed. I mean, if you look at the charts over the last 10, 15, 20, 25, I mean, I got charts out to 30 years plus that basically show the performance of alternative investments, compared to the stock market, and alts are outperforming by 50% or greater in almost any time frame. And so I've just spent most of my time in that space. I got started in real estate. I love real estate. I moved quickly into private credit. I love that as well. Moved into private equity and all sorts of unique alternative investments in, whether it be collectibles or spirits or wine, business, AI, SaaS, music royalties, original content. I mean, I'm a big fan, first and foremost, of building out the cash flow portfolio. So number one, we've got to figure out, and we study a lot of asset allocation by the wealthiest people. So we, dig into it. Like, I geek out on reading these reports, the reports that JP Morgan puts out and Goldman Sachs and these aggregators of family office data. And I read these every year when they come out. There's about 7 to 10 major reports that come out that manage or outline 200 plus of the family offices, meaning the groups that manage the money of the wealthiest people, specifically in the US, but also worldwide. And we just figure out what that asset allocation looks like. And so we want to model that. We want to copy success, but we also at the same time want to get the cash flow there so that people can live life by design, not life by demand. So how do we help people to have asset income, not trading time for money? And then as we graduate from that, how do we get a nice asset allocation? Because most people make their wealth via concentration. You can lose it that way too. But once you have it, or along the way, the wealthiest people make the majority of their wealth over time by diversification. So how do you win in any economical season, right? That you have a portfolio that performs well, whether there's a recession, a depression, whether the economy's climbing and growing leaps and bounds. It's important to have something that performs, in all circumstances. And so we try to model after that. And so my investments have very much been that. We have allocations very similar to what the wealthiest families in the U.S. and in the world use.
Yeah, for sure. Yeah, we've had Michael Sonnenfeld on the show. We've talked about Tiger's asset allocation and typically talk about that. It is interesting, though, at different tiers, people are looking for different things. We've had a lot of centimillionaires in, and obviously there's more of a focus on wealth preservation, right, at that level.
Most certainly.
Versus accumulation.
Yeah, and Tiger 21's great. I think I've been a member for 7 or so years, and Michael's done a great job building an awesome community. It's interesting, though, because when you compare the data they're very heavy real estate typically compared to the other allocations. So they're often 2 or 3 times the allocation to real estate. And that makes sense. It started as a real estate group to what, a family office might have, to what UBS or Goldman Sachs or JP Morgan or KKR's numbers look like that put out these reports, where a lot of these groups, real estate is 10 to 15%, whereas Tiger's generally in the 25 to 35%.
Right. Yeah, no, all types of different lenses on it. Do you have any type of hedging strategies as well?
Yeah, I mean, certainly I think the way I look at it is it's good to have exposure to most things, but it's good to be smart about what that allocation looks like. So if you have something that it could be an outlier, there could be some pretty significant upside, but if you lose everything, it's not going to destroy you, 1% of your portfolio. So for example, I do 1% in angel investments. So I do very little in early stage because it's so risky. But if I lose 1% of my portfolio, then it doesn't change life. But if I hit, it can be a massive win. I do the same thing with Bitcoin. where, to have at least 1% of your portfolio in that, because that's been, it has outsized return potential. But if you lose 1%, it's not the end of the world. It doesn't change your life materially. And so, having a couple of those plays, maybe smaller percentage, having some allocation of treasuries right now where we're at some of the, historical best, rates that we've been at, and to keep some money liquid, I think is really nice. I like private credit too, though. I mean, we're in a season where if you find the right groups that do their proper due diligence and homework and their leverage is low, you can create some great returns in, doubling or tripling what you're getting in treasuries, but still really safe, collateralized at 2 or 3 or 4 times the money that is invested. So I think all those are really important, and all those can help produce a great performance over the long haul, even if public equities or private equities aren't slamming, right? I mean, most family offices have somewhere between 15 and 25% in public equities and generally 20 to 30% in private equity. So you add that up with real estate, private credit, most family offices have at least half of their net worth in alternative investments, right? If you add that up. And so how do you allocate in a way that you're earning a return no matter what? You've got cash flow to live life no matter what. You can cover your expenses no matter what. But if the economy goes up, you make good money. If the economy goes down, you make good money.
Yeah. What is your view on public equities?
Well, I try to model again off of what my experience has been of what the wealthiest people in the world, and more specifically, the data I look at is in the US, what they do. And most of them, the ones that are in it, it's a small percentage. Most people think that the wealthiest people have all their money in the stock market. That's actually not true. Most of them, it's 15 to 25%. And the reason for it, you can bank on long-term growth of US economy and all that. But I think most of the people I know that are in it are doing that because they can borrow against it without having to sell anything, and they can buy more alternative assets with that money. So you've got to play where long-term, you're pretty sure the US economy is going to increase, but in the short term, we can borrow against it at favorable rates, especially depending on what your net worth is, what your backing is, who your bank is. Like, there are ways you can still get really good rates today, even though rates are at historic highs, right? And by the way, they've been higher than this before in history, right? But right now they're the highest. It was the highest climb, the fastest climb. But there are still good rates that you can borrow against and buy other alternative investments. And so that's really where I see the majority of my wealthy friends and the families that I study having their money and why they have it where they have it.
Yeah. Justin, if you could give just one piece of advice to our listeners about how they could accelerate their own wealth trajectory, what would it be?
Well, I think it's just getting around people that have actually done what it is that you want to do. So we live in a very interesting world where when you survey high school students, the number one job that people want to have, the career they want to have, is to be a social media influencer. And that's really sad to me because it's, I'm not even going to get into that. It's scary to me because a lot of social media influencers represent themselves or misrepresent themselves to be experts in a certain thing, even though they haven't had the years of experience to be an expert in that certain thing. But because they have a following that is large, a lot of people say, oh, they must be an expert. I'm going to listen to them. I'm going to put my money with them. And that to me is it's gambling. It's really dangerous and it's really high risk. So my biggest advice is find coaches, find mentors, find a peer group that is playing at or at a higher level than what you are. And what that means is like higher level of health, at higher level of business, higher level of wealth creation, a higher level of whatever it is that you want in life. Find the people that are actually experts at that specific thing and just become a student of what they do. Spend as much time with them as you can.
Yeah. Sage advice for sure. Justin, really appreciate the time and insights today. It's been a great conversation. I know we could continue this for quite a while, but do want to respect your time. If people would like to learn more about you, follow you, check out your book, what's the best place?
Yeah, the best place to go is lifestyleinvestor.com. We've got everything there. We've got everything from the book to master classes to courses to the masterminds. We really spend a lot of time and tons of free stuff, a blog, a podcast. You can get a free copy of the book there. But for those of you that do decide to get it on Amazon, the new book just came out, the updated and expanded edition of The Lifestyle Investor. So the original book is now a top 1% of all books ever sold, #1 Wall Street Journal bestseller. All the proceeds go to fight human trafficking. So I just want to make sure that everyone knows when you buy the book, good things happen. And we've been able to donate hundreds of thousands of dollars on behalf of this book. And I'm thankful for that. And the new edition literally just dropped. So I'm thrilled about that. But for your community, I thought it might be cool if anyone wants to figure out what next steps for them could look like. We've got a team that does these strategy calls. They're usually $500, and they help people, get from point A to point B. But I'd love to offer that to your community for free. So anyone that goes to lifestyleinvestor.com/consultation, you'll get a free one-on-one strategy session that is geared towards you specifically on next steps that you can take.
Awesome. Really appreciate that. We'll make sure to link that in the show notes. Again, thanks for your time, Justin. Really appreciate it. And we'll talk the next time.
Can't wait. Thanks for having me on. So much fun, Dave.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.